Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to today's current market analysis on identifying potential opportunities. I hope some of you attended our earlier session today. We actually had some great setups, particularly that Euro Pound. I hope somebody was able to take advantage of that one out there, and I'll break that down today, and we'll go a bit further. Also, some interesting kind of, I wouldn't say updates, but like some very interesting moves today, retraces today, and then one thing I want to bring up again, you guys know I'm always looking to give you guys something new, is and I brought it up the last few weeks, but one very interesting note today is the amount of, I guess, focus or net, I guess, positiveness in basically market sentiment right inside of gold on using daily effects. So it's pretty cool. So got some fun things to talk about today. We'll jump right in. If you guys hear the birds again, they're pretty excited today. I don't know, in the last 30 minutes it's been like, it's webinar time, let's go. So we'll just jump right into things for the day. So before we begin, for those of you that don't know who I am, I'm the president and CEO of Keep Trading Simple. I've been doing this for, I hate saying it, and I say it every week, but about 20 years now. I started trading back around the tech bubble time frame. Started, like many of you guys out there, retail trader. Back then, we just bought books. You would go to Barnes & Noble and things, and other bookstores that don't even actually exist. Basically try to find strategies in books, and they weren't always the best way to do things. And I learned a lot of what not to do first before I found the right thing. And I started with stocks, options. I ended up finding Forex, fell in love with it. I learned to trade futures as well. I found binaries obviously a few years ago. And again, it was a perfect kind of complement into the style of trading that I enjoy to do. I did become a financial advisor as well. I work for one of the big three, so got a very kind of inside look of what the market looks like on the other side of the equation, and realized that all these financial professionals out there that are typically managing money really don't know much about the actual markets. They're following guidance from somebody inside, and it was nothing like I thought it would be, but it was a great experience. I learned about bonds, which we don't really hear or talk or get into much in the retail realm, but it really kind of opened my eyes to kind of the sphere of influence of the true kind of financial markets. Written a number of different classes in regards to technical analysis. A lot of them too, in general, how to trade markets with kind of a busy schedule, working full time. As you guys know, Jen, the baby, the little one in this picture, her hair is like mid back now. It's about a year and a half old picture. She'll sit here on my lap. So again, juggling many baskets is typically how I am trading, and I know many people out there do it as well. So I have tried to create things, and my analysis is meant to basically be for anybody really that's out there. All right. So again, when you're looking at my charts, you'll notice I'm not using a lot of the, I guess the traditional methods that people tell you. I'm not throwing MACDs up there and RSIs and stochastics and getting bogged down in indicators. I'm reading a chart for price action. Okay, so you guys will see I do a lot of horizontal boxes, marking off areas of supply and demand, really back to the, kind of the basics of trading. And what I find is the basics is what works best. All right. So with that said, before we dive into charts, let me go through the Nadex risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to another transaction, including fees. Now, the information presented within today's presentation is for informational and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures, and Nadex is a registered trademark of the IG Group. All right, so today, what are we going to run through? Our typical list here, right? We're going to go through the upcoming news events. Obviously, everybody knows what this week is. There's not many of them left. When I show you guys the chart, there's really nothing we have to worry about for the rest of the week. There's a couple small things tomorrow that we'll go through, but for the most part, all focus at this point is basically on Thursday and Friday. Next week will be much the same as well. What we'll do is we'll dive into indices, and the indices have been kind of obviously with stimulus. We'll kind of update you on where we're there. What's going on with that. We'll cover Forex because Forex has really had what I would say is the best opportunity. And the reason I say best is because we've seen a decent amount of movement, but then we also are getting retracements back, which have been great trading opportunities. It's been pretty easy to grab. Now, we're not talking about enormous 500 pip gigantic movers and things. No, we're talking about kind of intraday trading type levels. So a swing trader is probably not happy because it's retracing back and forth. but there's been some really great trading opportunities getting your 1 to 3s, 1 to 4s, and 1 to 5s out there. And then I'll go to commodities. So commodities is extremely interesting right now. Again, lower volume typically means that things tend to move a bit more, right? Gold and silver this week have actually had some interesting moves. In essence, they've moved, but is it what most people assume was going to happen? And the answer is no. And a lot of that has to do with the stimulus, some news out of Russia talking about increasing their demand or increasing their barrels per day, basically increasing supply and having oil react accordingly to it. So again, very interesting kind of very interesting opportunities, to say the least, especially in a week that is not the largest of weeks as far as volume and things go. But that's it. Let's just dive right in the charts. I think that's probably the easiest bet here. So let's bring this across. Let's dive over into the indices. So earlier today, obviously, actually in the overnight, we got news of an agreed upon stimulus deal, right? I watched some of it. This is a joke, but I felt like I lost many brain cells watching it. It was 15 minutes to vote, 45 minutes to collect, and everybody wanted to get their part in. And some people were honorable so-and-so, and some weren't. I don't know. But anyway, they ended up passing the parts of the stimulus in the Senate, right, in Congress. And it was forwarded across. And the initial reaction was great, right? I mean, there was a little push down, and then we rode back up again. You guys can see we went, much higher. And we went back to where we were really at the end of last week, kind of pushing those all-time high areas up in the 12,786-ish range. The last time that we were up there, as you guys can see here, let me move this across. The last time that we breached there, you can see that my indicator ended up showing us, again, marked it off. We had a big push down, a base, and then a huge drop down, right? We ended up coming right back to that same area today. And earlier, let me see, this actually triggered at about 8:30 when we were talking this morning. The interesting thing about this level is, stimulus is great, right? It was nice to get the stimulus in, but was it the stimulus that everybody thought it would be? And I mentioned earlier today, the opening was going to tell us a whole lot about what the market and consumer sentiment was going to be, whether people liked it. You can see that at one point, and actually let me move this over here, move this over to the side. You can see we actually pushed all the way back down into this, mid 12,590-ish, 12,600-ish area, kind of this little kind of hiccup here. Pretty much universally across the board, I have seen people more disappointed in the stimulus than they are supportive of it. And the reason why is because we saw numbers up in the 1,200 area. It came in at 600, and why 600 is great is anybody living on $600 a month. Some of the protections and things like that they put in are great, but considering this is, not as, monumental when we are at kind of all-time highs with coronavirus, and we've seen, countries now being locked off like the UK because there's new strains, and South Africa has a new variation as well. And now people are talking about, hey, this is like the flu. We're going to need a bumper every year. People are kind of like, hey, this is worse than we thought, and this is all the stimulus you put together, and it took you how long to do this? We've seen disappointment. We've seen the markets heading to the downside. And that's where we've gotten. So, kind of going back on how to trade this one, I think we have to keep in our radar this 12,760, right? Really just not there, but this kind of whole level, like this whole area up here, right? We've seen it push, right? Again, we've seen another spike up, and sellers stepped in, and then sellers stepped in hard here. And again, even on positive news, bam, we pushed back down again. Going from that, 12,750 all the way down into the 12,990-ish range, actually to the 600. So not the reaction in the overall market that most people saw. Now, as far as intraday goes, you guys, for weeks I've been drawing kind of this intraday curve level, talking about the really strong highs and lows, and I've used the 4-hour, the kind of the larger time frames for that one, dropping it down and kind of shrinking it to a lower level though. Let's bring this across, be easier that way. I'm going to move this over to the side, and again, this is our higher time frames. But right now, we're seeing kind of an interesting little play here, at least on the hourly, where prices come down very, very fast. We came down and tested it again, and really bottom side, we're seeing some major problems really in this area. And again, we've had some basing here, and it popped up and hit it again and hit it again and hit it again. So right now, if I was going to draw kind of a top and bottom and figure out, looking at an area to play for the rest of the week, I have to say this would be kind of my kind of playbook right now as far as where I'm looking bullish and bearish, right? Um, we're kind of sitting in the middle. I have to say the reaction thus far, I mean, it pushed down and some buyers stepped in, but if we can't turn around now and drive higher, even after finally getting through the hurdles of the stimulus, what's to stop this from coming back down to the 12,400 level? You know, and that's kind of what I'm looking for, is kind of overall targets back to the downside. So, I initially was hoping that, the stimulus would give us the push further, because it is progress, right? It is something good, but unfortunately, it just wasn't enough. And again, the disappointment is showing in the market. And as we're hearing more difficulties, and again, news out there of coronavirus and how it's spreading. We saw news earlier today. Ontario shut down. Again, I have to say, I think I'm more bearish the NQ for the rest of the week than I am bullish. Going across the S&P, kind of the same idea. Now, the S&P had that same kind of drop and fall off, although it didn't go as high today. It felt like this one was a little bit more insulated, right? As you can see, I mean, this one we'd already kind of, drawn more of an intraday curve level in this one. And again, good news in the overnight. From it getting past, it kind of pushed back down and it's more consolidating. But right now, and again, I'll move this one across, I'm looking at this level here around 36.75. And what I'm looking at is actually not this level so much, but looking to the left of the level and seeing really kind of this space. You know what? I'll just use this level right here. Again, we were looking for breaks of this last week. We got it, but I'm going to actually use the coloring now. I'm actually looking for this level right here and saying, hey, if we get a break of 36.75, right? Actually, it's a little bit lower than that. And again, my numbers are going to be slightly off of what yours are, but really a break of this low at 36.72. What is to stop it from going and coming all the way down here about 40 points lower, right? Basically, the last time we had buyers step into the market. The answer is not a whole lot, at least on an hourly basis. And even on a 30-minute, right? Even on a 30-minute, you can see there's no wicks down here signifying that there are buyers stepping into the market. So I'm kind of looking at this and saying, hey, listen, I think there will be an initial fake out. As soon as we break 36.72, I expect there'll be a bounce because support and resistance traders will be like, hey, got to get short, right? It is in the middle. Again, if it goes a bit higher, again, it's wherever that base is, would be kind of an area for me to take this one short. I think good targets to 36.35. I think another one, again, we've drawn this one. I'll go back up to an hourly. We have this Harry Potter level where, again, we've struck this area a few times. Could it bounce late in the week? Yeah, it's possible. But again, I'm looking for breaks at 37 or 36.70 and 35.94 as potential shorts. Again, targets originally at 36.35. Now the Dow, kind of the same scenario. This one actually was up inside of a 4-hour level, and you can see early morning, right? We're running into those same type levels. And again, these type of strong movements, this is the indicator, but again, you can see we tagged it once, tagged it again, and we continue to push lower. And particularly on the hourly, it's pretty obvious to see that really from here across, we've had nothing but selling. It pushed in, it pushed out. Actually, let me change this color so we don't confuse everybody here. We'll change it to white just so it's a little easier to see. But you're able to see that price dropped at base that pushed down. It tried to buyers tried to step in and save it. It pushed higher, ran into those same sellers, and look at the initial reaction. All the way down, we bounced right off the 29,545, pulled back up again. Those same sellers protected that same level again, and again. So it's kind of the same thinking. If we have a break where where the buyers have kind of rescued it, the next time is really over in here for us to have buyers again. It pushed down, and then buyers kind of save this. So kind of the same thinking, could we have a small trade setup right here of a break of this level? And again, that's right around that 30,000 mark. Just think about the psychological effect of price dropping below 30,000 again. I mean, think about what the news is going to say. The markets have turned bearish. They've dropped below 30,000 again. It's like, oh, where's it going to stop? Well, we've seen some buyers down here at 29,775, and then again down at 29,454. So right now, with the sellers stacked up, I would love for this to go higher. I think that would be great. But on a technical basis on the chart, you guys can see there's seller, seller, seller. There's a lot of selling areas right above where we are. So again, I feel like it's the same situation. Of the three indices, I felt like the Dow had the best chance of being positive off of the stimulus because, again, it's more associated with manufacturing and things like core retail sales. people got less money than they thought. You know, has our life been saved with an extra $600? You know, I think one positive is the additional $300 for federal, you know, from what is it, federal support for unemployment. I think that's definitely helpful for people that are not working. But is it the end all be all? And the answer is, I mean, the debt that people brought up. I mean, I'm sure people, you know, wanted their their kids to still have a, you know, a good holiday season. Probably went a little bit farther in debt. Is that $600 really going to help and cover everything? I don't know. I feel like the market feels like no. So, you know, again, may we take a bounce off this level? Sure, we absolutely may. I mean, it could. I mean, there are things to be positive about. But if we can't drive any further and we get another level of basing and then a push below, look for one of those Harry Potter confirmation entries to the downside below 30,000. Now, switching across to currencies. Now, currencies have been kind of all over the place. Like the Aussie dollar right here, this is down about 38 pips in the last 24 hours. And we've seen this one kind of spike around. And you can see that this white area has been kind of an area of interest, right? It came here, it based in it, went higher. It bounced off of it. It kind of snuck below, came back up, based on it, came back down. So right now it's in a level where I'd be willing to say, hey, listen, I'm probably okay taking this one short. Since the stimulus has gone through, we've actually gotten more dollar strength out of this. Again, they didn't give the U.S., you know, the general public, they didn't give them as much money as they thought, meaning that they produced less money. The big worry in this one is we would have massive dollar weakness because they were just going to be printing money left and right, throwing it everywhere, making it rain, and it was less than what they expected. And again, bringing us dollar strength. So right now, and normally, you know, this is in dark gray, right? And I'll throw another level sitting in here, kind of the middle range. We're sitting in the middle. We have this area of interest that, again, has provided us numerous kind of opportunities for bouncing back and forth. If we're unable to clear above this, I'm kind of thinking and feeling the same thing. I mean, with the disappointment, it's kind of a push to the downside. As you can see, the demand doesn't come into lower. You know, the indicator is showing us down here based off the two sides. It's showing us down here, which is between the 1 to 3 and the 1 to 5. You know, could this be, a decent short trade today for maybe 35, 40 pips? Yeah, absolutely. I mean, if this level holds here, it could be a nice little drop to the downside. And again, it is 12 o'clock in the afternoon, but as far as news goes, there's not really there. I guess there's private sector news tonight for the Aussie, but nothing really crazy, right? Nothing really crazy for the rest of the week. So again, if we hold, and again, sellers have pushed in that level, I'd be looking to kind of roll this one to the downside. Now, once again, also very, very similar. And you can see if I extend this white area across, it did the same thing, pulled back, it based in this level, and it's right there. Same idea. Came down, ran through. Again, telltale sign it's going to break, dropped. Came back up, based, telltale sign it's going to go higher, popped up. Grab more sellers. So it's also in a consolidation pattern. If I wanted to draw this, you guys could draw it here, and you could also, come off the bottom side and be like, oh, look, it's consolidating. And it is. It really, really is. It's kind of pushing the highs are higher, or I'm sorry, the highs are lower, the lows are higher, and we're really looking for a breakout of that level. And if you're using this top and bottom, we know that this one is still very, very high in the curve up top, right? We know it's very, very high. I'd say right now, I mean, if you're looking for strong areas of buyers and sellers, I would have to draw it really kind of here to here. And we're, again, sitting kind of in that middle no man's land. So consolidation, middle of the area, no man's land, no real news. This one's a little bit harder to play for the day, all right? For the rest of the week, I'd say it's kind of similar. I would say, looking at this, there are more sellers up top than there are buyers on the bottom. So it kind of has me feeling that this one will roll back down into the 77.50. But again, the last reaction, actually both reactions off this 77.50 level have been very positive in the Aussie's favor. So it could be a nice area to go long. And again, that is the bottom, very, very kind of extreme of our daily curve here. Nice level to be able to kind of push into. All right. Now, Euro yen. Man, it's still like watching paint dry. I mentioned it earlier. This one is pretty boring. I've been looking to go short this one, and all it's really been doing is kind of bouncing back and forth. And you can see we had an area 126.58 from yesterday's session we talked, and it did. It kind of hit there and it was rolled back down. I expect buyers to step in a little bit lower. I wouldn't really say there's not really any great news coming out of here. There's been a lot of kind of low quality data, but most of it has been on. It's just one of those things. This is more of a Christmas trade. And, if you've been able to catch a top, if you were able to get short from 126.58, it's about 40 pips. So it's been a decent kind of day trade device. But anything that you've been holding longer than that, it's been very difficult. think about knockouts, right? I mean, if you were gonna, use this and trade it with a true knockout sense, right? I'm gonna get into this one. I'm gonna hold it till one of my two sides gets taken out. It's been a bit disappointing, right? It's been a little bit disappointing. The reason why is because here we are now, right? We can go back and we can talk about how the same time here on what is this, the 18th, right here, we're basically in the same area. So you could have held this, for 2 days, 3 days, and we're kind of in the same spot from where we were, right? So it's one of those things. It's been good for kind of small time trading, but that's really about it. Um, and again, just to kind of point it out here, I'll drop it down to 30 minutes so you guys can see it a little bit easier. Right here is the European Open. So all the work that they put in north, about 40 pips high, all it did was retrace back down, and we're the exact same place we were from the European Open. So as you guys can see, even with binaries, trading a daily on this one right now, little bit difficult, right? And again, the volume is much lower than normal. Now the pound yen, obviously everything was great. It hit a level, it came back down, it retraced exactly where it was supposed to retrace. I can leave this one over here. We based off that. Actually, I'll have to get rid of this, but yeah, this was the Harry Potter from last week. But you guys can see, I mean, this is where your profit target should have been, right? Profit target should have been exactly in this level. Reason why is because that's where we know there was a major imbalance in price, right? Actually, it's there. Should go a little bit lower, but here's the basing, and then bam, explosion off. This is that parabolic retracement trade you guys hear me talking about. Huge emotional move, filled the gap. Again, that was the gap from Friday, rolled back over and kind of pushed, and went all the way down, and now has turned from the same level. Now we're playing inside of the middle region, so again, I always show a little bit more caution in here. Where do we go with this one now? A little bit harder. I mean, I do like this level for an area to go long. It's going to probably run into some issues. Most likely up in here around this 138.96 level. As you can see, there was a basing area here. It came up and touched it and then dropped away, came in, retested, and dropped again. So, again, it's not speculation. We know sellers have stepped into the market here up in this level. And again, on an hourly basis, you can see it's pretty well defined there. Right there off the red candles where we're supposed to put it. So we're kind of playing in a very small area. Now, we got about 70 pips to go, so it is a pair that can move a lot. In the last 24 hours, this pair is only up 40 pips. So it's not one of those ones that had you been holding this one, for the last 2 days, you can't really claim a major, gigantic victory, right? I mean, we went from extreme to extreme, and now we're kind of playing in this middle area. Obviously, right now, there is no Brexit deal. The last I saw this morning, basically the EU, and let me hit the button again and refresh, see if I just didn't miss anything. Yeah, the last one was the EU rejects the latest fishery offer. So there's not much going there. And, we haven't seen this collapse and drop through the floor. I mean, it hasn't gone down to 130 with weakness. I feel at this point, I feel like the UK is prepared for that no deal and handling what's going to happen. I mean, at this point, we know nothing is happening from now till January. They've already said it. The EU said we will not ratify anything in regards to Brexit for the rest of the year. Okay, those are the statements that they've made. So nothing's getting done. This is kind of like post-Brexit agreements at this point, trying to come up with things. So, the pound is, the island hasn't sunk. It's not moving at this point. I would say, hey, listen, if we can get a rally back up again, again, if you're long, look for 138.96. But I would say that definitely keep this 139.50 on your radar. We're early in the week, but again, obviously through Christmas and everything else, the currency market doesn't close, but I mean, they do celebrate Christmas. It's not just an American holiday. But that's an area we need to watch out for as kind of the next potential kind of rollover to the downside. Also keep on your radar the extremes. Obviously, the 130.28, it was a great trade last week if you guys would have got in. The 137.13, again, it's a level that not only do we have basing and a retest confirmation here, as it came down, what did they do? They stepped in and it launched it higher. The island didn't sink. And again, now we're playing in that no man's land. So keep that one moving. Pound dollar, more or less the same thing. You guys can see we're kind of stuck with this area of interest here. Same idea. We rallied all the way up, filled the gap from Friday, and have pushed all the way back down. Decent mover, about 204 pips. And same thing. This was that area of interest when it based. We were looking for this to pop, and it did. Here's where your target would have been. It was the last time we had a red pullback candle, and you can see just magically it did the same thing. Why did it turn? Well, because there was buyers here, right? Pulled up, there was a retracement, buyers stepped in and launched this higher. That should have been your profit target. We've bounced off of it. Now, this one has the same kind of issues that the pound yen had. You see this choppiness, all these wicks back and forth. I would say there's a little bit of basing in here. I'd be cautious for this one. Same thing. I would wait for this one to kind of rally back up into this 134, really the 135 level, right? 135 is just right there, right? So that's kind of the extreme. It's a big round number. Not only is it a 5, but it's got 2 double zeros in it. Huge psychological level. Again, that driving forward is basically pound strength, dollar weakness. We've seen a lot of dollar strength come in, but I don't feel there's a lot of different things. And again, this is my thought and opinion. I do feel like in January, we are going to be hearing about another stimulus package. After all the swearing in and everything happens, there will be a slight shift. I feel like there, again, when the changing of the guard happens, I feel like we're getting another stimulus, and that's really where I can see all the destruction in the dollar that we expected to get now. I feel like it will come in January, and I do think for the pound, I do think we will get back up into the 136. I don't believe there's going to be a deal at this point. I think it's too late. I think some trade deals will come in, but the fact that this hasn't dropped through the floor, I do feel like we will get back up. So, I think there'll be some back and forth, some more negatives. I think we can rally up to the 135 and drop at the 136 area, as well as another area to pull back. But overall, I think I'd have to be, more bullish this position. Now, euro pound, I'm going to actually switch across, and I'm going to go over to here. All right, because I just wanted to show you guys again. It's always great when we can talk about something in the morning and then follow up hours later, right? So, for those of you that are on this session and are not aware, every single morning on YouTube, right, on Nadex's YouTube, we do a broadcast of kind of what's hot and not. And every so often, there's something that we will put out there that, again, it combines traditional thinking, non-traditional technical analysis. Here's what we talked about this morning, and this is what we've seen, right? We talked about drawing some fibs, right? We went from low to high, right? This last major push up, and we ended up finding this 23.6 level. Now, that's been a level that's kind of bounced around. It kind of bounced off of it once it pushed lower. And then what we did is we took some fibs and went from high to the most recent low, right? Taking kind of that longer time frame and the extension back again. And it was very interesting to see that not only did the 23.6, but the 61.8 both just happened to go and slice through. You guys can see it right there, right? You guys can see that they both just happen to slice through what I would deem as a supply zone. It's a drop, an area of basing, a little bit of a hiccup, and then bam, an absolute huge push to the downside. So call it a triple witching, call it whatever you want. It was a small level of risk, only about 6 pips. And look what it's done. And again, we were sitting right here this morning, right? 9:30 right here. And I said, hey, 91.40 was good, but look for this big drop because we got to adjust. Well, here we go. At 10:10 this morning, 10 o'clock reversal. Again, another magical time to trade, right? 10 o'clock reversals are some of my favorite things to trade. We tagged that level about 6 pips worth of risk. And as you guys can see, this is a 10-minute chart. Let's see. In exactly 30 minutes, we'd already moved 1 to 3 on our risk to reward, risking 7 to make 21. A little tiny bit after that, less than an hour later, we hit our 28 pips. And then here we go, 2 hours up to 35. So 1 to 3, 1 to 4, 1 to 5, triple witch. I mean, actually, probably, I guess it's a quad witching, right? It's 2 fibs, a supply zone, and a 10 o'clock reversal, all right on top of each other. And talking about a 2-hour binary, this was at 10:10. Here is the 12 o'clock candle, or here's the 12 o'clock right here. So you can see that this not only went from here down, and why is that important? Well, again, we moved 3.5 2-hour strike price binaries to the downside in less than 2 hours. Again, risking such a small amount, 35 pips, great place to be. Now, we're seeing this continue to roll off that level. I think that's a fair assessment of where it's going to be. As you can see, the first time we pushed down to this buy level, it popped up. Then we came down to buyers again and popped up again, and then dropped lower and popped up again. And now we're looking for the next set of buyers, and that's coming in approximately down here around the 91 flat. 91 flat, again, also, again, with fibs, that would be your 23.6 here as well. So, couple different areas. That's where I'm assuming the next bounce is going to be. Again, psychological number right around a bounce. European markets closed, and again, we'll have some equalization back again. But it's one of those things that whenever you guys see multiple kind of things all stack on top of each other, it kind of almost becomes one of those self-fulfilling prophecies. And this is one of those ones. I have a very close friend of mine who's a big fib trader, and we're like, hey, check this out. Everything lined up. I hope you traded it. If you did, I'm gonna give him a hard time today. But these are always fun. And again, this is kind of like a Christmas gift when you see this kind of stuff, right? Or whatever kind of holidays you trade. So that's where we are with the euro pound. Switching back across, let's go over to the euro dollar. So euro dollar has been crazy this morning. And again, this is more the dollar strength stepping in and European weakness. Now, as you can see on an hourly level, you can see what we ran into. Just, again, this is, let's see, 12. This really started to kick off at about 5, 6 o'clock this morning, but it's a level we had talked about in the past, this 122.54-ish area. As you can see, we kind of had a base put in. There's a 4-hour level here. It's been tested, pushed down, and then bam, here's where the weekend gap happened. Well, we just happened to come up to the same gap, tagged it, and have dropped all the way to the opposing side, 92 pips in 4 hours to the downside. Okay, now again, this is dollar strength disappointment with the stimulus. Now, where do we go with this now? And that's a great question. So right now, we're seeing some basing sitting right on top of a level. And again, we saw that basing and punch higher. To draw an intraday curve on this one, I would say using this on the 4-hour levels, I would say that this would be my intraday kind of top and bottom. And I say intraday because, as the day closes and rolls, this will kind of, move forward as well. But I would have to say that these are kind of my two areas where I'm saying, hey, listen, here's our extremes. Extreme low 121.45, top side would be 122.54. We're kind of a little bit in the middle, but I think that this is really due for a bit of a retracement. Yeah, everybody was disappointed with the stimulus. We've seen the dollar reaction. And again, the overall general consensus is this was just not good enough, right? It was just not good enough. That means the politicians are like, wait, my people aren't happy? Well, maybe we should talk about adding a second round in January. And all of a sudden, bam, that's where we bring that weakness back in again and we retrace back up. So as of today, I don't know that we're going to get much more out of this today. If we push a little bit lower, I'd like it. I'm kind of curious to see where we are tomorrow morning because, again, I expect there to be a lot of movement off the UK Open. And again, the UK Open was right about, let me make sure I'm giving you the right area here. There we go, 12:30. European Open was right here. Okay, so you can see this one took a little bit of a bounce higher, and again, not a bad bounce, 46 pips, and then again, US stepped in and drove us lower. So, really looking for movement at the UK Open, I think, is where this needs to be. If I had my call, if Santa is listening out there, if I can get this to come down to 121.45 before the UK Open tomorrow, I'd be willing to take this one long with some strength coming back in the market on the EU side. Now, dollar CAD has been kind of interesting. I was looking for a break of this level. I got the base, and again, no trader is perfect. You're going to take losses. Had you traded this with Nadex, you'd lose whatever the cost to enter the transaction, including the fees were, as you guys heard in the disclaimer. I was looking for a break and a push lower, and it really kind of did a fake out. It dropped at base below, and then it kind of popped and went to the top side. Now, it did give us that confirmation, right? Remember, we were looking for a base and a confirmation pullback. It punched through and based and gave us the pullback on the other side. So it's kind of one of those things. We missed it to the downside, but you would have been able to catch this. Not only here, but here. Now we've been rallying higher. It's the same thing, right? Since really the U.S. trader has stepped into the market, it's been nothing but dollar strength straight up. Hasn't really bounced off a decent level. And again, part of that has to do with really kind of the wicks that we've seen. You can see that on the 30-minute, it did go off of a level, but the way that the candles formed, it wasn't really an area that I was necessarily interested in. It would have been a great profit target, as you guys can see. Here's that punch through. This is where we would have got stopped, right? The base, the pullback, bam, it broke through. It did give us the confirmation here. And again, this is why you guys always have to watch this stuff. Again, you could take it there, but there's your push. There's your pullback. Oops. There's your pullback. And then again, your punch higher. Right now, my thinking is kind of the same. Most of the dollar-based pairs have pushed into their supplier demand levels because of dollar strength. I do think we are due for a bit of a reversal in the other direction right now. This one I would say is consolidated in between this actual supply zone and this little area right here of buyers, right? You guys can see, let me switch this to white so you can see through it. Right there, right? So not surprising it took a bounce. And even so, I mean, again, this may be one of those Harry Potter continuations right here, right? Bit of a reversal, awful level. look for a pullback. There may be a little bit of a hiccup in the 1 to 3 is before the opposing buyer stepped in. Maybe the trade of the afternoon for this one, as again, we see kind of a retracement, absorption, and maybe some comments about additional stimulus if needed. Anything that will weaken the dollar, right? Again, Ontario closing down doesn't help the CAD. But I think there will be other areas that are closing down, other restrictions put on as we get closer to the holidays. And again, I just think that's going to happen this year. I know that, I don't know for anybody else, but in Maryland, I guess the governor said the theme this year is home for the holidays. He wants everybody to stay home, don't go anywhere. I was like, oh, okay. So yeah, home for the holidays is our theme in Maryland. And I feel like that is around the world. It's home for the holidays. Don't go anywhere. You're not allowed to leave. But again, justifies a push down. Now, dollar Swiss, I've marked this one off. Yeah, this one is still like watching paint dry. We're still stuck. Here's the same level that I keep talking about. Every time we get in, we kind of break out, sneak back in, push up. And again, I think this one, it's had okay movement, I guess. I mean, 30 pips in 2 hours, and now it's starting to retrace and fall back down again. Just nothing tradable, and I don't expect this one to be tradable for the rest of the week. Dollar yen. So dollar yen's an interesting one. So we did not get our short entry here. So here's price right now at approximately 103.65. We were looking for, again, remember, a break below a base and a push lower. We didn't get it. And right now we're kind of consolidating in. So this is one of those ones. I went over to, again, right now on this one, Daily FX has this one as about 66% of clients are net long. Okay. And again, for a number of different reasons, but on like a 30-minute, I'm looking at this one, I'm saying, can we really push much? I mean, a majority of people are long this position, and now we're running into a level here, and again, on an hourly, you can see it a little better. We're running into a bunch of different levels, and again, they're pretty strong moves to the downside. So although we're kind of in the, impulse, correction, and push up, we just bounce off of a level on the hourly. I have a feeling, my take on this one is, if most people are long, again, 66% of IG clients right now are long, we run into levels on pretty much every pair. I kind of feel like we're going to run into this one as well, and we're going to start rolling this one and flipping back down. Now, where would my profit targets be? Kind of, you guys can see it right down here, overly, back down here towards 103.35. It's okay. There can be an argument made that this one is consolidating in. I do feel that, again, I think I don't want to necessarily take this one all the way down because, again, looking in this level here, you can see we've had some gaps. Here was a gap. We punched up, we opened, we touched, we went higher, we hit it again, we hit it again. So I do feel like we are due to push lower. The question is, which one of these levels is going to be where we kind of base and stop next? And will we run out of steam, right? We have to think about this as well. Tomorrow, kind of an abbreviated day in trading, right? Friday, is this market open? Yeah, but are you going to see a whole lot of movement? Maybe, maybe not. Dollar yen is not historically one of those big things that moves on Christmas Day, right? So yeah, I would say bearish. Really, do I have a great level for entry? Great risk level? Not really. I mean, this is too big for an hourly. It's it's 15 pips. The ATR is 9, so it's almost double what the ATR is on this side. It's a bit big. I'd like to take this smaller, and I do think this one roll over and push lower. All right, so let's go to gold. So gold, here's the position that we talked about. Again, I mentioned this, I want to say yesterday, and I think it was for both groups. I know we only have so much time in the morning, and I was kind of calling things. I'm like, watch gold. It's in a level. I know I covered it with my group right afterwards, but it was pushing back up into this 30%, the top section. We had seen sellers step in at 1896. We had seen there a lot of kickback in this level, right? And we talked about this one coming and dropping back down to the 1864. And you see, about an hour and a half ago, we finally broke through. Now, we're still playing in the middle of the curve. I gave you the intraday curve level here. It was just trying to peek its head out of there before being pushed down. But the same sentiment is there. Wait a second, we got stimulus. Why didn't it go all the way up here, right? Stimulus is here. The market had prepared and had assumed we would get more stimulus than we did. Okay, it had assumed that we were going to have extreme dollar weakness. A lot of extra money means a lot more inflation, right? Well, we didn't get the inflation. It's not as much money as the market had assumed. Hence, gold is starting to roll back to the downside, as well as the dollar. Again, the dollar is getting some strength. So, will gold retrace? Yeah, I think it will. Would I be willing to go short this area? I don't know. That's a very hard one based off of timing with the everything going on with Christmas, the holiday. Could this be a bottom? Yeah, it could be. I mean, like I said, I do expect it to be a retracement. I think we will go up. It's not a clear kind of, we haven't really left the area. I would say probably the next, big area. I mean, I like 1847. I like that level down here. It's been tested. It didn't quite make it this low. I don't know. I mean, scenarios that could come up. I mean, they could mention, this could continue to grind down just because of a lack of trading volume, right? And then again, a senator could say, hey, listen, this is decent. This is the first step, but we still haven't, stabilized our country yet. We'll have to view that with the new incoming, as I said, the changing of the guard, when president-elect becomes the actual president. That would be another catalyst to drive this higher. But right now, I would say, depending on the time of day, 1881 could be at another, place for us to sell. If we can get back down to the 1847, it could be a buy. For some reason, if we get a nice spike up into this 1896, kind of similar scenario, kind of rolled over and push it back into that middle level. Again, on a larger time frame, you can see over here, we're really just playing in the middle, and again, we're not seeing major moves up or down. The second we broke into the upper third, we pushed back down again. So, bit of consolidation. Now, silver, more or less the same thing. We were looking to get this one short up at 26.40. Unfortunately, it didn't even make it up that far. It kind of ran into a little bit of a level of basing, and they just collapsed. Kind of the same thing in this one. 24.90 is an area that I've been kind of watching out for. It's the last time we saw some decent movement, and it was front run the last time it spiked down. We are in the lower quadrant, so of the two commodities, I think this is the better of the two metals to trade right now. Only because it's been a level, it hasn't been tested. It's been front run. It's in the extreme range of the low curve. All those things, kind of that triple witching, all falling back into kind of the same idea again. Again, not everybody trades the metals. It's just a level that I think that is decent. Also, silver can be affected by China, but right now it's being basically dragged around by the bigger brother gold and inflation and what that looks like. Last but not least, let me pull up oil. Where is it? I know I have it somewhere. Oh, by the way, remember I talked about the sentiment? How is that for sentiment right now? 82% of people are long gold, okay? And I mentioned this earlier, and this kind of goes into market psychology. I'm actually in the middle of a presentation for market psychology. But remember, if everybody and their brother is short gold, right? For you to get short, somebody's got to be willing to buy it. Who's going to be dumb enough to buy it from you, and vice versa? If you want to buy something, somebody has to sell it to you. Typically, when this is so biased in one direction, that tends to be a telltale sign of where it's going, right? 82% of people are long, but yet gold is bearish, gold is dropping, and we haven't quite hit a level. When this starts to level back out again, will tend to be where the price turns and starts flipping. So, the question is, how much lower can it go? How much longer do these people with long positions want to lose money? The moment they hit that area where it's like, I can't take any more, that's where it switches. Okay, so pretty interesting kind of setup on that one. Let me pull oil now. Here is my oil chart. Oil. So we mentioned a couple different things with oil. We had an old level. We talked about another kind of couple different opportunities in this one. Earlier today, you can see gold was kind of messing around with this level down here at 47.50. Again, psychological level. We had seen a level here in the past, and we have used this level, this 47.72 to 47.86. It's been a level that was a top for many times. It based and then became an area to go long. What was the top became the bottom, and now it's switched as well. Push down, and you can see it bounced through, snuck out the top. Oh, it's a break. We're going long. Big drop. Again, you guys can see it keeps coming back and stabilizing this level. Now, the level just a little bit below, you can see we had basing, touch, base, and then boom, that has also been on the level. This is more based off psychology, though. 47.50, again, that 5-0, again, big area. Where do we go with this one? I mentioned having your target set low the other day, 46.90. Tomorrow should be an interesting number. So right now, I don't think they have the forecasts in. Let me check very fast. Oh, they do have the forecasts in. So yeah, let me bring this down. Here are the forecasts for tomorrow morning for oil. It's both crude oil and natural gas tomorrow. They moved natural gas a day forward as well. They're expecting it to be the same down draw as we had before, a minus 3.1 million barrels. Natural gas is also expected to be a bigger down draw. I think the way to play this one is going to be to see kind of where we're at. Have we fully cleared this level? Have we pushed down? This level down here is 46.40. You know, again, this black line is at 46.50. If we can be that much lower by tomorrow, I think those would be decent bounce points. If we are not down there, again, there's a level of basing up top. Sellers have shown us that that level is good. We got another level right here we got to be able to break through. From now till tomorrow morning, I'm kind of thinking we may continue to push lower. Again, economy's not doing great. Dollar's getting more expensive. Gold is going down, which again, weaker gold also makes oil prices go down. To me, it's looking like from now till then, it looks like we'll have a push. This could be a decent level to get this long tomorrow. And I think because of, again, abbreviated time tomorrow, I feel like oil will probably be hot. You know, it's going to give us movement. The question is it all going to happen from the European Open till the oil release, meaning that it was kind of like a pre-released, somebody knew about it, the big guys are going to move the market type of scenario? Or is it going to go down low so we can get that news and go higher? All right. Give you guys a little bit of a foreshadowing, kind of talking about what oil can do. And again, I mentioned earlier, I'm working on a presentation right now for market psychology for something that Nadex is putting together. This is the kind of stuff that I'm talking about. You know, what can oil do? Here's what the move looked like from the European Open forward. And then all of a sudden, we got news oil inventory that came out that was green, which means it was more, which should have been, again, less supply, should have been great for oil. It should have made oil go higher. When it came out, oil went down. So kind of the same idea. If we get that European move, looking for a kind of a counter move. Again, maybe they miss, and again, it drops down. So a lot of different things to play with oil. But oil is one of those ones that is so psychologically driven. In my opinion, it's very, very manipulated. We got to see where we are. But again, if we can get this big drive down for that European Open, again, it could be a great area, or maybe the exact opposite. Maybe we push back up, we stabilize here to the European Open, and again, what that does is it gives us an ability to take this one short tomorrow. So best thing to do is look at it tomorrow morning when you wake up if you're not trading the European Open. See where, if we've come to a stabilization level, again, up here at the 47.72 range or down here at the 47.50. If we're just flat in the middle, it's probably not going to be the biggest mover, but look for bounces higher or bounces lower. Kind of if we're here tomorrow morning for news, look for a down spike, or again, look for an up spike. Again, kind of one of these, and look forward to kind of roll from that level. But I think we will end up tomorrow somewhere between the 48 and 46 level. Again, $2 range, but we're sitting right now at about the 47. So it's dollar up, dollar down. And again, if you guys are unfamiliar how to play these, I do like binaries a lot on these, the shorter duration binaries. And I do think most of this movement will happen tomorrow before noon. All right, so that is it. Ended a little bit early today. Remember, don't forget, we are going to do a presentation next week. Next week will be a little bit different. I don't tend to do a lot of trading in the last week, but again, I will get on, do some analysis, and we'll talk about kind of a summary for the year, kind of see how things have moved and where potential big areas are going to be going into January. So it'll be slightly different, but it will be 12 p.m. Eastern Standard Time at next Tuesday. Don't forget, if you guys are not attending the 9 a.m. sessions, you can attend them live just by going to YouTube and checking out Nadex's Nadex's page on YouTube. If you can't make it for some reason at the start, say at 9 o'clock, you cannot get on. They're only about 15 minutes. They are there. You can watch them afterwards as well. They only really pertain to the day, but I don't know, say you get a coffee break, or maybe you're commuting and you get there after that, or you can take a 10-minute, 15-minute break. The sessions are only about 10, 15 minutes, so they're pretty quick. They've been really, really fun to do. Make sure you head over to Nadex's YouTube page and check those out as well. If you have any questions for me, you guys are more than welcome to email me. I do get a couple of emails a week, so don't, if you're one of those people that's always been like, oh, I know, I don't want to bug him, shoot me an email. I do get emails. I try to respond back as fast as I possibly can. Website's keeptradingsimple.com. You can catch me on Twitch 9:30 a.m. Eastern most days, or just, again, email me, even if it's just wish me, Merry Christmas. I will do the same. Support at keeptradingsimple.com. You guys take care. Thank you so much for joining us, and I'll catch you guys either tomorrow morning at 9 a.m. or next week at 12 noon. You guys take care and have a great day.